All right, welcome to This Explainer. Today, we are taking the complex, honestly sometimes dry world of financial disclosures and turning them into a story you can actually use. We're going to unpack the Q3 2026 SEC Form 10Q filing from Penguin Solutions and transform it into an exhilarating look at strategic shifts, corporate maneuvering, and some massive profit leaps. If you follow the tech sector, you already know that earnings reports can completely make or break a company's momentum. But the real story? Well, that's always hidden right there in the fine print of the SEC filings. So, let's get into it.
First things first, let's establish exactly who we're talking about today. Currently trading on the NASDAQ under the very familiar ticker symbol, PGNN. Penguin Solutions isn't just a name. It is a major player in the tech infrastructure space. But as we're going to see in just a moment, the company that filed this latest report looks fundamentally different both legally and financially than it did just a year ago.
Here is our quick game plan for today. We'll start with the U.S. domestication, then look at how revenue hit new heights, break down the profits, check the balance sheet, and finish up with future risks and realities. Part 1. The U.S. domestication, or basically a strategic corporate moving day.
Okay, so we really need to talk about redomiciliation. Big word, right? But for Penguin Solutions, it essentially just meant packing up their Cayman Islands corporate registration and legally moving to the state of Delaware. Now, why on earth does this matter to us? Well, Delaware is the absolute gold standard for U.S. corporate law. By shifting from an offshore exempted company to a Delaware corporation, they signaled a much deeper integration into the U.S. financial ecosystem. It gives them stronger legal predictability and perfectly aligns them with what traditional U.S. institutional investors want to see.
And you know what's crazy? The speed of this shift. It was so rapid. They finalized this highly complex, court-sanctioned scheme of arrangement under Cayman Islands law on June 30, 2025. Then, literally without skipping a single beat, they made their U.S. trading debut on the NASDAQ as a Delaware corporation the very next day. July 1st, same exact ticker symbol, PENG. On the surface, it looked totally seamless, but underneath, a monumental legal overhaul. Moving on to Part 2. Revenue hits new heights. Our top-line surge.
To truly grasp the scale of their growth, we got to look in the rearview mirror for just a second. Back in the third quarter of 2025, total net sales were sitting at $324.2 million. For a company navigating all the shifting demands of tech, that is a very solid foundation. But wait until you hear what happened over the next 12 months. It changes the narrative entirely.
Fast forward to Q3 2026, and they hit a massive $478.7 million in total net sales. I mean, we are looking at a top-line surge that absolutely proves market demand for their offerings is accelerating. They aren't just incrementally inching forward here, they are actively capturing significantly larger market share in real time. So where is all that cash actually coming from? If we deconstruct that $478.7 million, it becomes super clear. Physical products are the massive, undeniable engine of this company. We're talking over $414 million just from hardware alone. While services did pull in a respectable $63.7 million, their tangible tech solutions are what clients are heavily investing in. And that distinction matters because manufacturing physical products carries totally different supply chain dynamics compared to just selling software.
All right, Part 3, breaking down the profits. This is the bottom line explosion.
Now brace yourself for this comparison. Back in Q3 2025, they saw $3.45 million in net income. Compare that to Q3 2026, which skyrocketed to $46.18 million. I really want you to let that sink in for a second. They didn't just double their profits, they didn't just triple them.
We are looking at a roughly 13-fold leap. It is incredibly rare to see a mature tech manufacturer multiply its bottom line that aggressively in a single year. What this tells us is that they aren't just moving more product. Their profit margins, their cost controls, and their overall operational efficiency are all perfectly synced up. Their current market strategy is hitting the nail on the head, converting top-line sales into hard, undeniable profit.
Section 4. The balance sheet. Let's ground this financial foundation.
Okay, we need to check their actual financial health to make sure these numbers are sound. Looking at their position as of May 2026, the picture is incredibly stable. They're sitting on a very healthy $2.19 billion in total assets, which comfortably covers their $1.53 billion in total liabilities. This asset-to-liability ratio is exactly what you want to see when a company scales up this fast. It proves they aren't funding their explosive growth purely through dangerous levels of debt.
And if we drill even further into those assets, the filings reveal a highly liquid cash pile of over $440 million. In the volatile tech sector, cash is the ultimate defense mechanism and honestly, the ultimate offensive weapon. This gives management immense strategic flexibility for future investments, acquisitions, or just weathering any unexpected economic storms.
Finally, Part 5, Future Risks and Realities. Time for the macro reality check.
Now, to be completely impartial and just report what management themselves put in the filing, they know they're vulnerable to macro forces way outside their control. They point out shifting AI trends, which, let's face it, are booming right now but could pivot in a heartbeat. They also highlight geopolitical uncertainties, specifically noting conflicts in the Middle East and Ukraine, which naturally ripple out into global supply chain disruptions. Plus, because they rely so heavily on hardware products, they are totally at the mercy of volatile pricing trends for memory components. It is a stark reminder that no matter how incredible your internal numbers are, external global realities always get a vote.
So, looking at everything we've just covered, that mind-blowing 13-fold profit leap, a fortified balance sheet, and a strategic legal leap to Delaware, I've got to leave you with this final, provocative question. Can Penguin Solutions continue to outpace these looming global economic risks? They've clearly built a powerhouse engine, but the macroeconomic road ahead, it is full of potholes. Thank you so much for joining me for this explainer, and definitely keep a close eye on how this fascinating tech player navigates the quarters to come.